I'm Janet Noak.
And I'm Andrea Dillon. We are a mother-daughter CPA firm serving the United States business community with tax preparation services, tax planning, tax resolution, assurance and audits, and CFO outsourcing and consulting.
Thank you for listening to the WOW podcast, Words of Wealth from CPAs of Florida. Learn more at cpasofflorida.com or call us at 239-936-6144. Good afternoon, everybody. I'm just going to do an initial test, make sure everybody can hear me. Those of you that are close to me, can you hear me? Tim, can you hear me?
Yes, I can.
Okay, perfect. Okay, I'm going to start. Can you speak, Tim, to the audience or no? Okay, I'm going to have you, Tim, go through the Zoom notes of how I'm sure everybody on the call has now used Zoom, but if you will go through how to use Zoom and then we'll get started.
First of all, welcome, Carls. Welcome, Charles. Welcome, Dennis, Jay, Jeffrey, and many others that have signed in. We're excited to be hopefully leading you to a new solution for additional help from the PPP program. Those of you that got it first round, congratulations, and we hope you're on your way to having it forgiven. And now we're going to take you to the next phase. During the meeting, if everyone would please maximize your screen. If you have any questions, don't use the Q&A. Use the Q&A and not the chat. The chat is a little bit challenging sometimes to work, and we can do better with the Q&A. And then next to the Q&A is a raise your hand. So if there's something you really want me to stop, Janet, and address immediately, stick your hand up and I'll be happy to do it. We will record this entire presentation and it will be available on our website. You can send me an email if you don't see it or you have some trouble with it. We'll be happy to get you the instructions to it. So without further ado, I'll bring you Janet, and hopefully you leave here more educated on the new PPP program.
Awesome. Okay, Tim. So for those of you that don't know me, and I know we have some first-time people on the call, my name is Janet Noak, and I'm with CPA of Florida. And I have successfully led an awful lot of people through this COVID relief, financial relief. We've done a lot of work with the PPP loans, with the EIDL loans, with the different grants that are available. And so I thought I would address this with a lot of you and a lot of the people that we have helped as well through this. So I know there's a lot of people on this call today. So if you have questions, just send them over to Tim in the Q&A, right, Tim? Not the chat. Yeah, send them over in the Q&A and he will try to keep us on track and we will get all those questions answered. If for some reason I don't answer them, I will get back to you privately after this presentation. So let's talk about PPP first of all, because that is one of the things that everybody wants to know is what changed from the first round of PPP loans. So this new legislation passed January 6th of 2021 does have some big changes in it relating to the first round of PPP loans, which many people on this call probably did receive. First of all, the expenses are now deductible. For those of you who had kept track of it, initially they had said that the PPP funds would be non-taxable, but that you had to eliminate the expenses you paid with those funds. So ultimately, the PPP money effectively became taxable. Well, this legislation actually clarified that because that was not the intent. The intent was to put money in business owners' hands that truly needed it. So now the expenses will be deductible and the PPP funds themselves will not be taxable. So that's a big win for the first round of loans. Also, there are some new expenses that are allowed for prior loans, and we're going to talk about that on the next slide. So if we look at what they're now allowing, they have an expanded definition of payroll costs. In the past, we all know you could do the salaries and you could do the local, state payroll taxes, healthcare, retirement plans. Well, they've now added group life insurance, group disability insurance, group vision insurance, and group dental insurance. And you can actually go back and amend your first PPP application and add those increased costs to your original application. Now, what you can't do is you can't go back if you forgot to put retirement plan contributions or healthcare payments. That initial application is actually not allowed to be amended unless it relates to the new costs that they're allowing you to take. So ultimately, you're going to have had a lot of vision, dental, disability, or life to make it worthwhile to go back and amend the first round of funding application. But it is an option, and you certainly can qualify to do that if you paid those benefits and you did not get them included on your first round of funding. Okay, they have also, and I'm going to go pretty quickly in these so that we have plenty of time to talk about the new PPP funding. So,
And Janet, if I can interrupt real quick, I have a question that's appropriate right here. Will the eligibility for second round loans be affected by receiving the first round or an EIDL loan?
I'm going to get to that. So hold tight. I promise that's coming up. Okay, so simplified forgiveness applications were also part of the COVID relief. And one of the things, if you will recall, when you got the initial funds, some people got them when there were 8 weeks. You had to use it all in 8 weeks, and then they expanded it to 24 weeks. And then they gave you the chance to start the forgiveness calculations like at the next payroll date. They called it the alternative covered period. Well, that alternative covered period is gone for all forgiveness applications moving forward. So you can only use payroll for 8 through 24 weeks. That's it. No alternative period anymore. Loans less than $150,000 do have the option to use the simplified application, which is going to be 1 page in length. It's going to include a description of the number of employees that the employer was able to retain. It's going to ask for the estimated amount of the loan spent on payroll costs, give the total loan value, but then you're going to have to attest to the accuracy of the information you're providing on the application and to compliance with the rules of the PPP program, and that you are retaining relevant records. So you're going to have to attest to all of that in case you were to be questioned on any of the calculations for the forgiveness. So if you have already received forgiveness, we're going to talk about a reason you might want to switch and actually do so there's a long form and an EZ form now to get forgiveness. And one of the reasons that you may want to actually do the long form for the forgiveness is because there are some additional costs coming in, and those are not able to be isolated out on the EZ form. And also, we're going to talk about the employee retention credit, the ERC, and the ERC cannot use the same wages as the PPP, so you can only use wages one time. So as we get further into the presentation, I'm going to tell you why you might want to do the long form instead of the EZ form. If you decide later that you want to do the long form and you've already done the PPP EZ form, you will not be able to withdraw the EZ form once forgiveness is attained. So it's one of those things you're going to have to decide. And if you have already submitted for forgiveness and you want to make some changes, now is the time to reach out to your lender and withdraw your application for forgiveness. Once again, we're going to get a little bit more into that in a few minutes here. So everybody wants to know about the second round of PPP loans and who's going to qualify. So first of all, if you did not apply during the initial round of funding, so let's say you decided that you didn't need money during the initial funding, you can actually apply without any rules that apply to the second round of PPP loans. So the portals actually were supposed to open January 11th. You have until March 31st to apply. And these are actually only going to be done from community financial institutions. So I think you're going to see a smaller amount of banks that are going to offer these. But you can apply if you did not apply initially. If you have already received one round of funding, then you have to have 25% drop in income. And so let's talk about what that looks like. So it's going to be from 2019 to 2020. So like quarter one of 2019 as compared to quarter two of 2020, or quarters 2, 3, or 4, you have to have a 25% drop in income. Or for the entire year, you have to have a 25% drop in income. If you do that, then you most likely will qualify to apply for additional funds. Now, we've gotten a lot of questions. What method of accounting? Because maybe you're down on cash basis and you're up on accrual basis. So the answer has been, you need to use the same method of accounting that you normally use. So most of our clients file their tax return on accrual basis, but they pay tax on cash basis. So ultimately, most will be using the accrual basis of accounting, but we can't, that's a case-by-case basis. The other thing that they have done is they've said, okay, some employers are seasonal. So not everybody is going to have been down one quarter over another, but what you can do is you can use a 12-week period and the same 12-week period from 2019 to 2020. So you can use payroll costs for any 12-week period between February 15th of 19 and February 15th of 20. So that is going to help out the seasonal employers a lot. And a very special rule for restaurants, bars, RV parks is that they are going to have 3.5 times the payroll costs that are qualified versus 2.5 times. So in the past, you took your annualized payroll, divided it by 12, and then multiplied times 2.5. Restaurants, bars, and RV parks are actually allowed to get 3.5 months of PPP funds during the second round of funding. So that's a big deal. What they're saying is on your tax return, there's a little spot where you have an NAICS code, and that code tells all the demographics when you file your tax returns. That's how they do all the calculations they do and give industry numbers. You have to have an NAICS code beginning with 72. So that's a 72 NAICS code, which is what we're going to talk about in 1 second. And also, they're making it very easy to apply for the second round. If you apply with the same lender, they have a simplified application. So that simplified application will make you just have to provide some new numbers. There won't be a lot of documentation required. You will have to provide some certifications, which we will get to in 1 minute. And if your loan is going to be less than $150,000, no documents are going to be required. Some of you remember pulling a whole bunch of documents so that you could get this done the first time. Now it's going to be no documents, just revenue numbers. We're going to look at the application in 1 minute. And Tim, to your question, you must use the first draw before receiving the second draw. So you cannot apply for the second draw until you have fully used the first draw. Actually, that's not true. You can apply for it, but you cannot receive it until you actually have used the entire first draw. Does that answer your question, Tim?
I will check with you.
Okay, perfect. All right, so let's start to dig into it a little bit. These are your 7-2 NAICS codes. So if you're accommodations and food services, RV and recreational camps, special food services, bars, drinking places, restaurants, and other eating places, you actually have 40% more coming to you in this PPP than you did in the last one. So that's great to note. And if you're in that category, you need to be looking hard at it. If you're not, you need to be looking at if your classification has been wrong in the past on your tax return. So this is the new second draw borrow borrower application form. And if you look at the areas highlighted in yellow, this is all you're going to have to provide if you have actually had a reduction in revenue and if you're going to receive less than $150,000 in this second round of funding. So if you see, you're going to say 2020 quarter one was 100,000 and 2019 quarter one was 100,000 and 2020 quarter one was 50,000. So this is where you're going to show that you had that revenue drop, and that's what's going to make you qualify for the new funding. Any questions, Tim? No?
No, not at this time.
Okay. So one of the things that is going to be looked at harder in this round of funding is the statement that everybody had to attest to that said, current economic uncertainty makes this loan request necessary to support the ongoing application operations of the applicant. So I know that when we were advising people for the initial round of PPP loans, we said there is a ton of economic uncertainty. Even if you didn't know if you were going to need any money, there was a ton of economic uncertainty. Well, now they're actually making you certify that it is necessary for you to continue in operations to have this money. So they have not offered clarity on what circumstances a business must be subject to in order for a PPP loan to be necessary. However, they have been very clear that if you have tons of cash in the bank, if you have had no need for the PPP funds, they're going to look harder at those loans. Now, once again, the SBA is going to pursue the loans above $2 million. However, what they're saying now is they're going to make it easy for whistleblowers to turn you in effectively. So they have refused to make the second loan not be public knowledge. So borrowers, it's going to be public knowledge that you got money. And it certainly could be an ex-employee, it could be an ex-spouse, it could be a competitor. Someone who hears that you received funding is going to have a whistleblower way to turn you in if you receive it and you don't need it. So that is a big deal on the second loan versus the first loan. And I'm sure we all know someone who received money that technically didn't need it, and now they're going to start to watch that. So any questions on the second round of funding of the PPP? Because I'm going to go into the employee retention credit, which is a little more tricky. Okay, so employee retention credit. This is a credit that nobody really talked about when we did the initial PPP loans, because the employee retention credit was a credit for payroll taxes, in effect, reimbursing an employer for payroll taxes for each employee. And they said if you took the ERC, you couldn't get the PPP. Well, most people wanted the big cash to hit their bank account quickly rather than waiting for having to pay payroll taxes and take them as a credit. So most people did not do anything with the employee retention credit. But now the new legislation says, oh, you can actually get the employee retention credit and the PPP, and you can go back to 2020 and get it for the prior year. So you're going to see that this is a big deal. So one of the requirements is that gross receipts from any quarter in 2020 must suffer more than a 50% reduction from the same quarter in 2019. So if you're a restaurant, if you're a bar, if you were shut down, if you're one of those businesses that's going to get 3.5 times in the PPP, you are likely going to qualify for this employee retention credit. We're going to go through some examples of how much this credit is. I'm going to talk through it right now, and then we're going to look at some slides with examples. So 50% of the first $10,000 in wages, which is W-2 wages plus healthcare, paid by the eligible employer for the year. So if you had 10 employees and you had, that's times 5,000 per employee. So that's $50,000 in credit that you may be able to go back to 2020 and amend your payroll reports to get that money refunded to you. So for 2020, the wages actually qualify from March 12th of 20 to December 31 of 20. An eligible employer must have had operations fully or partially suspended in 2020 during one quarter and have experienced a significant decline in gross receipts during the calendar quarter. If you voluntarily shut down an essential business, for instance, we were an essential business, we did not shut down, but if we had voluntarily shut down, we would not qualify unless the gross receipts threshold was met. So that means a decline in revenue. So let's talk about what gross receipts include. So they include your sales, interest, dividends, rents that you might receive, royalties, fees, commissions, and reimbursements from clients. So let's say that you, I don't know, you're a law firm and you get a ton of reimbursements for court filings. Those actually count in your gross receipts when trying to figure out if you're down 50% from the prior year quarter. So, and you can continue to receive this credit until your prior calendar quarter gross receipts equal 80% of the prior. We're going to go through all this. I know it's really complicated, so I'm going to show you some examples and we'll get there. What is not included in the gross receipts is sales tax, intercompany transfers of money, and then for an example, if a real estate agent gets closing proceeds, so they get $100,000 for closing as the closing costs of a real estate sale, only their commission part counts. So it doesn't count for the entire sales price. If you should decide that you qualify for this credit, you can amend your 2020 941, which is your payroll filing report, to claim the credit. However, the amount of the credit does become a non-deductible expense, which is different from what we talked about on the PPP. So in my example, if you got $50,000, then you're not going to be able to deduct that as an expense.
Janet, how about 1099s? How do they play into that?
They don't. This is W-2 wages. And I've actually been asked by people if they could go back and change them to wages. And it's going to be very difficult to do that because payroll reports were not filed. So technically, no. There is also a little glitch that has come up with this, is that wages paid to related parties do not qualify. So in my example, I have my husband that works with me, I have my daughter, and I have my sister-in-law, and none of those qualify. But there's a loophole right now in that the employee owner still qualifies. So I would qualify, my wages would qualify for this credit until such a time as they close that loophole. And what they've said is that if you apply for a refund prior to them closing the loophole, you will still get to claim yourself. So there is a little bit of a loophole there and a little bit of a reason to apply quickly. Now, the other thing I do want to mention is that this has to be done by January 31st for 2020. So the clock is ticking on this for sure, because it is January 13th today. How'd that happen? It's 13 days into the new year. So let's dig into some examples. So if you have 3 employees, you have employee A, employee B, and employee C for 2020. And employee A is paid $15,000 per quarter. For 2020, they qualify for $10,000. Employee B is paid $7,000 per quarter. $7,000 of quarter 1 qualifies, and then $3,000 for quarter 2. They hit their $10,000. Employee C is $3,000 per quarter. All $9,000 qualifies because they never hit their $2,000 or $10,000 max. So ultimately, we have $29,000 of qualified wages. So we got 20 and then 6 and then 3, so $29,000 times 50%. Just with these 3 employees, you could possibly receive a refund of $14,500 for 2020. It's quite a good potential cash in your pocket. So that's not 14.5 in a deduction. It's 14.5 in cash in your pocket. Now let's look at 2021. How did this change? So now it's 10,000 per employee per quarter. So remember that same employee that got $10,000 for 3 quarters total? Now you got quarter 1 and quarter 2 that they get 10,000 for each quarter. And now we got 7,000 for each quarter for employee 2, employee B, and 3,000 for each employee for quarter C, or for employee C. So now that same payroll, you could get $40,000 of qualified wages. And for 2021, the percentage increases from 50% to 70%. So now that same exact payroll goes from $14,000 to $28,000. So it's a huge difference from 2020 to 2021. And this is all done through your payroll filings. So if you're using a payroll company, you want to reach out to them and you want to get this done. Now, they may not be willing to amend the prior year for you, but they can definitely help you to get this credit for moving forward in 2021. Have I confused anybody out there? No, all's quiet. So that's a good thing. Okay. Also, there is an employee retention credit eligibility if your gross receipts from 2019 to 2021 went down. So that's, look at that closely. You're actually going all the way back to 19 and then looking at 21. So that is a big deal that you can go back to 19 to get some eligibility. I want to show one more thing that okay, we're just going to keep going forward. Okay, so that is a possibility as well. So you need to fill out a spreadsheet. We actually have a spreadsheet that we could send to you if you were interested in trying to figure out if you might qualify for this credit, because as you can see, it's quite a lucrative credit. And if you've had a reduction in your gross receipts, this is worth pursuing. So I'm going to wrap up with the ERC right now and go on to the EIDL loans because I was trying to be done in 30 minutes. So we're at 28 minutes right now. So we'll get it done pretty close to that. Okay, so the EIDL loans, you know fully well what those are. They had the advance and it was up to $10,000. And some of you that have received forgiveness, they excluded the advance from the forgiveness. Well, now they've said it's not going to reduce forgiveness. However, you're going to have to be patient because the SBA is going to reach out to your bank and your bank is going to work with the SBA to get that corrected. So you don't need to do anything. You don't need to change anything on your application. You simply need to just hold tight. If you're applying for forgiveness now, you won't have that issue, but you did have that issue if you applied one of the early applicants for forgiveness. The other thing that they're saying now with EIDL is that they have newly replenished some money, but your business continuation must be uncertain. Basically, they've said your business cannot continue without this. So it's very important to understand this is kind of the same as the necessity grant, the necessity statement, but this is a higher standard. It says that the business continuation must be uncertain. So that's something if you're going to go after an EIDL loan that you're going to need to be able to attest to. And the third thing is that it's been replenished to lower income communities first, So that's a big deal as well.
Janet, you might want to note too, there is a whole nother program that's got $1 billion funding in the Rural Development Agency, which is generally farming communities and communities that are very sparsely populated. Whole nother set of complexity. If anybody is in those areas or has businesses in them, probably needs to reach out separately. We didn't cover it in this seminar.
Perfect. The other thing that I want to mention, which is on the next slide, and I'm not sure if anyone is on who is qualified for this, but this is the Save Our Stages grant. And this was signed December 27th by President Trump. And ultimately, if you are a live venue operator or promoter, theatrical producer, or live performing arts or organization operator, then they're going to reimburse you 45% of your 2019 gross revenue. So let's say that you are a theater and you did $3 million in 2019. They're going to give you 45% of 2019 sales as a grant. So they're trying to reach out to the shuttered movie theaters, producers, all of those promoters, live performing arts organization, and try to get you some extra cash so that you can get through this tough time that has definitely financially impacted your business. So the initial grant includes costs incurred March 1 of 20 through December 31st of 20, and covers operating costs March 1st through December 31st of 20. You must have been operating since February 29th of 20, and you're going to compare 2019 to 20 and must have lost 25%. Now, the only comment I want to make, and then I'll get off of this one because there's not many that are actually going to qualify for this, is that if 90% or greater loss, you can apply for this in the first 3 weeks. So if you had a severe reduction, now is your time to apply. And you cannot apply for the second round of PPP funding if you're going to apply for the Save Our Stages. So once again, some coordination about what you should be applying for and when it will work for you.
Janet, I got a quick question to clarify, please. The ERC is available only to companies that had to be shut down at some point?
No, actually, let me go back to my desktop where hopefully you can see my face now. Okay, so the ERC is available to companies that meet the reduction in gross receipts. If you will note that there was a slide saying that they had to reduce by 50%, then they will actually qualify. So if for some reason maybe you didn't have to be shut down, but you chose to shut down and you had less than 50% of the same gross receipts that you had the prior quarter, the prior year, the same quarter, the prior year, you will qualify for the ERC. Do you have another question, Tim?
Nope, I think that's, let me unmute, sorry.
No, but if anybody has a question, stick it in there real quick and we'll get it answered. I think we've got them all so far, Janet.
Perfect. Okay. Well, that's what I have for you today. I hope that was helpful to you, and thank you for joining us today. If we can be of assistance, we're CPA of Florida, and our website is just like it sounds, cpaofloridaspelledout.com. And there's a little chat bot down in the right-hand corner if you should decide that you would like to have further questions with us. We are certainly offering the COVID funding relief support. So if you need consulting or you need support on this, if you're not sure if you would qualify, reach out to us. We'll do an initial consultation with you at no cost to make sure that it's beneficial for you to do it and that it makes sense for us to support you in this. So I look forward to hearing from some of you and hope that you are surviving this crazy time in the world. And hopefully this is a little bit of a ray of sunshine in trying to get some additional funding to keep your businesses operational and keep your employees working. I'm Janet Noak.
And I'm Andrea Dillon. We are a mother-daughter CPA firm serving the United States business community with tax preparation services, tax planning, tax resolution, assurance and audits, and CFO outsourcing and consulting.
Thank you for listening to the WOW podcast, Words of Wealth from CPAs of Florida. Learn more at cpasofflorida.com or call us at 239-936-6144.